So today our theme is Wash Sales 101 for active traders. So we're kicking off an educational series over the next 2 months focusing on wash sales because this is the time of year when active traders should especially be concerned about wash sales. And so we're going to start with this first webinar really talking about some of the essentials involved with wash sales. And so to get started, just a little reminder from our friends in the legal department that the information that we're presenting, this is educational and informational purposes only. We do not make investment recommendations or provide financial, tax, or legal advice. So please consult with your tax advisor about your specific situation. You're responsible for your decisions, so you should evaluate the information we present because some of the information may not be appropriate for all traders and investors. So that's just a little nice reminder from our friends in the legal department. My name is Jason Derbyshire. I'm the Education Director here for TradeLog Software. TradeLog has been producing IRS-ready tax reporting for active traders and investors since 1999. And our website, TradeLogSoftware.com, provides resources and education for tax topics related to trading. So if you haven't yet checked out our website, if you're new to TradeLog, we encourage you to do that. And especially later on, we'll talk about some of the resources we have for active traders that you can find on the website. So let's get started. A little introduction for our presentation today. Wash sales, of course, are a major aspect when it comes to trader taxes and tax reporting. Especially if you're reporting capital gains and losses, you have to account for wash sales. There's a lot of misunderstandings about wash sales and the effects of wash sales. So in this webinar, what we're going to do is explain some of the key aspects of the IRS wash sale rule and discuss how wash sales affect active traders. A little did you know, why is this so important? Well, brokers are not required to adjust and report for all wash sales on the 1099-B. So there are IRS requirements for you as a taxpayer to account for additional adjustments under the IRS wash sale rule. So that's part of why this is such an important topic for active traders, because most active traders do have additional wash sales that they are accountable for adjusting. So it's important that you understand the rules involved and know how they affect you, not only on your tax reporting, but ultimately on your taxable gains and losses, because that's where it can really hurt. So first of all, we might ask the question, what is a wash sale? A basic wash sale happens when you sell a security at a loss and then you repurchase it in a short period of time. So look at the example that we have here in the box on the right side. Say you sell 500 shares of a security today. You have a loss of $1,000. Then you purchase 500 shares of the same security tomorrow. This is a wash sale, because essentially you own the same security. The price difference between the price today and the price tomorrow probably won't be too drastic. But in this instance, you have generated a loss on your P&L. Now, a canny trader could use a wash sale to try to harvest losses, to try to inflate their losses and maybe offset their gains, and as a result evade capital gains taxes. And so that is why the IRS has the wash sale rule, which is designed to prevent a taxpayer from using wash sales to evade capital gains taxes. This is nothing new. The wash sale rule has been part of the Internal Revenue Code since the 1920s. It's evolved some over the years. There's some aspects of the rules that have never been clearly defined by the IRS, but it's something that's gotten a lot more attention in recent years because of changes with 1099-B reporting. It used to be brokers didn't have to report anything about wash sales. Now the IRS requires brokers to report limited wash sales on the 1099-B. That way they have something to enforce with taxpayers. So let's take a look now at the IRS wash sale rule so we can better understand this. Now, here we have the excerpts from Publication 550, which the current version is for the 2013 tax year. This publication hasn't changed much over the years. Here on page 58, you see the basic wash sale rule. Still some big legal language in Publication 550, so let's break it down in plain English. Basically, the IRS wash sale rule says this: when you have a wash sale that occurs, you cannot take the loss at that time, the time of the wash sale. Instead, the loss is now moved forward. It's added to the cost basis of the new position, and so the new position now includes that loss. The exception to this is with an IRA trade, which we'll talk about a little more later. So here's an example. I have a snippet here from a TradeLog wash sale detail report, and I'll explain what we're looking at. Notice line number 1 in our example is for 100 shares of ABC stock. It was bought September 25th. It was sold September 26th. It had a $100 loss. Now we look at line 2, and this is showing 100 shares of the same stock that was purchased on September 30th. So this is a wash sale because within the 30-day window that the IRS defines, we have repurchased shares of stock. So notice the $100 loss that occurred on September 26th. Well, that is now adjusted. So basically, it's disallowed. It becomes a wash. And on September 30th, we now have to adjust the cost basis. Originally, these 100 shares were purchased for $850, but we now add the $100 to give us a cost basis of $950. So that's a very simple wash sale scenario. The loss is not allowed on September 26th. It's included in the cost basis of the shares that were repurchased. And when I finally sell those shares, then I may capture that loss. I may take that loss. It'll be included in the cost basis of those shares. I say may because there's another factor that comes into play, and this is especially so with active traders because you usually make more than one trade in the course of the year, 1 or 2 trades. Wash sale adjustments can accumulate, or I like to call it a snowball effect. If you're continuing to buy and sell the same security at a loss, it can result in an accumulation of wash sale adjustments, which is what we see in this example that we're showing on screen right now. Notice we have our initial first 2 lines that we showed on the previous report. Well, now those 100 shares that I purchased on September 30th, well, those I sell on October 2nd. I have a loss of $75 that results. Now I repurchase shares on October 7th. Well, that triggers another wash sale. I sell those October 15th. Those had a loss. Again, within 30 days, October 21st, I purchase more shares. So if you're in and out of the same position and you continue to have losses, those losses can continue to be adjusted with the wash sale rule, and it can snowball and it actually can accumulate. If you have more losses, that amount of the adjustments is going to accumulate. Right now, if you look closely and figure out this report, there's $175 that has accumulated and is attached to the 100 shares that are purchased on October 21st. So wash sales can accumulate throughout the year, and that's something we're going to talk about a little bit later, how this affects you, because this is where it could potentially have a negative effect at the end of the year. But let's look at another aspect, and that is the window for wash sales. Now, Publication 550 says a wash sale occurs when you sell or trade stock or securities at a loss and within 30 days before or after the sale. You create another trade, and then they go on to list the other scenarios. So the window for wash sales is 30 days before or after the date of the sale. We look at the example that we have here. Notice I've circled this sale, which occurs on November 18th. So we sell 100 shares at a loss on November 18th. Now, in this report that I have an example of, we have 100 shares that were purchased on October 28th, and we have 100 shares purchased on November 20th. So either of those purchases of shares could trigger a wash sale, because both of those are within 30 days before or after the date the loss occurred, which was November 18th. So in this case, the wash sale is being adjusted to the shares that were purchased on October 28th, so the earlier purchase of shares. Now it's interesting because the IRS doesn't have real specific rules about the date order. So sometimes you'll see, for example, a lot of the broker 1099B, when they adjust wash sales, a lot of times they'll go forward first. So they would maybe adjust the November 20th trade. But because of the IRS, because they're not real specific on whether you start before or start after the date of the loss, TradeLog always tries to go backwards, because in most cases this is ideal for you as a taxpayer because it's less likely to defer the loss to a future date. So that's one of the things that TradeLog is going to try to do, is go to the shares that were purchased before the date of the sale. But again, there is some ambiguity where the IRS hasn't always specified certain things on how it should be adjusted. But the key is here to remember, when you have a loss, there's a 30-day window, 30 days before and 30 days after the sale, where a wash sale could be adjusted to. So let's talk about our next area. What triggers a wash sale? Well, the IRS has a list here, 4 bullet points that they make in publication 550. You see that on the right side. And there's some terminology that the IRS uses, so I'm going to try to put that in plain English. Let's say you sell stock at a loss. You own shares of stock, a long position, and you sell it at a loss. You could have a wash sale if you buy shares of the same stock, or, as the IRS says, acquire them in a taxable trade. So even if it's not a actual purchase, if you acquired those shares in what's considered a taxable trade, that may trigger a wash sale. So identical stock. You purchase more shares, that could be a wash sale. Also, notice point number 3. The IRS says acquire a contract or option to buy substantially identical stock or securities. So if you acquire an option to buy the same stock, such as a call option, then that can also trigger a wash sale. So I know a few have already asked the question about stocks and options. And so if you are trading options on the same stock that you're trading as well, then there can be wash sales triggered by those option positions. That's really clear what the IRS says here in point number 3. So a contract or option to buy can also trigger a wash sale. Now, point number 4, as well as a little paragraph after that, we talk about different accounts. If you acquire these positions in a different brokerage account you control, or an account your spouse controls, then that is also a wash sale. Also, if you have an IRA account and you acquire one of these positions in your IRA, well, that can also trigger a wash sale. Now, there's some special rules involved with IRAs, and we'll talk about that in a few minutes. So now, one of the terms we see used here, we're not going to talk about this too much, is substantially identical. So oftentimes one say, well, what does that mean, substantially identical? And this is an area where the IRS has never clarified specific enough what is substantially identical stock. Usually, if you have shares of stock in one company and shares of stock in another company, those are not substantially identical. Even if they're very similar in their business, the IRS has basically said that's probably not substantially identical. However, they do have some different little things about what stock might be considered substantially identical. You could really get into that. The other thing is when it comes to contracts. Sometimes ones ask about option contracts. Well, most tax experts agree that you don't have to have an identical option. It doesn't have to be an option with the exact same strike price or the exact same expiration. Substantially identical would include another option on the same underlying security that creates the qualified position. So to learn more, we have on our website in our resources section, which I'll show you more at the end of the presentation, we have our guide to the IRS wash sale rule. And there we actually have a chart where we list some of the scenarios. If you sell such and such at a loss, what types of trades would trigger a wash sale. And these are the rules in essence that TradeLog uses in adjusting wash sales. Now again, some of this the IRS has never specified real clear. So what we do here at TradeLog, we consult with different leading tax experts based on various rulings, based on various tax opinions to determine, what is the generally accepted practice for what triggers a wash sale. So you can check that out more, and I'll show you that at the end of our presentation about wash sales here. Okay, so next we're going to talk about wash sales across stocks and options. So we've talked about that a little bit, but I just wanted to give you a little example here. So here we have the scenario we had earlier. We have shares of ABC stock. We've been buying and selling. We have wash sale adjustments. Notice here on line number 4, I sell on October 27 shares of the stock. I have a loss of $175. Then on October 30th, I have a call position that I open. I open one contract of a call. Well, that would qualify to trigger a wash sale because it is a contract to buy the same stock that I had sold at a loss. And so that would trigger the wash sale, which is here adjusted. Now I'm going to pause here for a moment. I want to take a look at some of the questions we have, make sure I'm keeping up with some of the ones that were being answered. And I'm going to put a question up. I have a little quick poll that I'm going to launch and get your opinions. True or false? Brokers are required to report all wash sales on options in 2014. What do you think? I'll give everyone a moment to get some different answers on that. Let's see if got a couple of questions here. Some of you have some questions we haven't answered yet. Please be patient because we may answer it yet in the presentation. And if not, we'll try to answer some of the questions at the end of the presentation. Now, one good question that Steve asked, when we talk about multiple accounts, again, there's some ambiguity from the IRS about adjusting wash sales across different accounts. Many tax experts take the opinion that if you file taxes on an account under a different EIN or Social Security number, that you do not have to adjust wash sales between that and a different account that's filed under a different EIN or Social Security number, because they take that to be two separate taxpayers. Now, I've seen some different things about that, and we're not going to give tax advice as far as what is acceptable, because it sometimes seems that the IRS says that you should adjust between two accounts you control. But that's a general guidance that we've seen from a number of tax advisors and tax preparers, is if it's two separate, if it's a Social Security number and then you have an account that you file taxes under an EIN, that you wouldn't have to adjust wash sales between those accounts because they're considered separate taxpayers. But that would be a question that you would definitely want to consult with your tax advisor on, and maybe get a more legal decision about your particular situation. Okay, so I'm going to close out the poll here. Give me a minute to kind of check up some of our questions, and thank you all for great questions. We have a great participation today, and we really appreciate that. So we asked the question there, true or false, brokers are required to report all wash sales on options in 2014. And the correct answer is false, so most of you are doing pretty good, 67%. Starting in 2014, brokers are going to be reporting options on the 1099-B. They don't have to report all options. They will be reporting most options on the 1099-B. But real tricky, will they have to report all wash sales on options? We're going to talk about this a little more later, but the brokers are under specific rules with the 1099. They only have to adjust wash sales on identical QSIP. So the scenario that we just gave, where we have a wash sale going from a sale of a stock that's being adjusted to a call contract, your broker is not required to adjust that because it's considered different QSIPs. The stock is one QSIP, the option is a different QSIP. Now, we're yet to see if any of the brokers may go beyond what's required and actually report some of these wash sales, but the rules from the IRS do not require them to make those adjustments between stocks and options. So most of you are on track there with the correct answer. All right, so let's continue on and talk about another aspect of the wash sale rule, and that is unequal shares. So far in our examples, we've talked about equal lots of shares, 100 shares bought, 100 shares sold. But the reality is most traders do not buy and sell the same number of shares every time you have a trade. So you're going to have unequal numbers of shares. Well, the IRS gives some guidance on that, on what's involved. And basically they say that you need to match the wash sales proportionally. So the best way to explain this is looking at the example that I have here. Say that you sold 100 shares on November 18th at a loss of $100, and then you had a repurchase of 50 shares on one date and 50 shares on a different date. Well, because those are unequal lots compared to the sale, we divide that sale up. So here, half of the wash sale goes to the 50 shares purchased on October 28th. Half of it goes to the 50 purchased on November 20th. Again, this is fairly simple because it's an even 50-50. You can imagine this can get really complex when you start having all sorts of different lots. And sometimes you may have more shares purchased than you had sold, or you may have less. So basically we have to create this matching and break down that wash sale amount proportionally. And as you see in this report that came out of TradeLog software, TradeLog will go ahead and make those proportional adjustments accordingly. Okay, another aspect of the wash sale rule that affects active traders, because a lot of active traders short sell. And so when it comes to short sales, there's some interesting rules involved with short sales. Basically, when you have a loss from closing a short sale, either a stock or a short option position, you can have a wash sale if you open a new short sale on the same security within the 30-day plus or minus window. And interestingly, most tax experts agree that the IRS regulations also imply that a purchase of shares or contracts in the 30-day window could also trigger a wash sale. So look at the example at the bottom. This kind of is a real simple one. You notice in this example, on November 21st, we have a short sale that's closed at a $100 loss. Then we open another short position within 30 days on November 19th. So that $100 from the short sale that was closed is going to be adjusted to the cost basis when we finally cover the position, the new short sale that's opened. There is no cost basis yet because it's a short sale. We've sold 100 shares short. But once that's finally covered, the cost basis will include that $100 adjustment in it. Now, the second bullet point on the screen, we talk about a purchase of shares. Now, this can be really confusing because you might think, well, why would a long position trigger a wash sale on a short position? And that's something, again, where tax experts who've looked at the IRS regulations feel that even though that doesn't make sense, the IRS could consider it as a wash sale because the regulations imply that when you have a loss on a short sale, purchasing shares of stock within 30 days could also be a wash sale. So that's why TradeLog, in our wash sale calculations, we consider a long position that's opened, a purchase of shares or contracts within 30 days to also trigger a wash sale. And again, you can learn more about that in our chart that we have. I'll show you that chart on our website at the end of our webinar today. So short sales can get a little bit confusing because it's actually a sale that can now trigger a loss as well as a purchase of shares. So sometimes that can throw people for a loop when they look at short sale positions. Okay, let's see. So now the next we're going to talk about holding period. Excuse me. So another aspect of wash sales is that wash sale adjustments affect the holding period. So not only is the amount of the loss adjusted to the cost basis, but the holding period of the new position is also adjusted. And this is designed by the IRS for a particular reason, because what someone could try to do is take a long-term holding at a loss and then turn around and open up a short position. And what's going to happen here is the short position is going to not only be, or the short term, I should say, not a short position, the short term position is going to include the holding period. So look at the example that I have, and notice here that on November 18th, line number 1, we sell 100 shares, we have a $100 loss. Now on November 19th, I purchase 100 shares. Now the shares that I sold on November 18th were held for more than 365 days, so it's a long-term position. So that would be a long-term loss of $100, but the wash sale rule says can't take it. It's now adjusted to the new position. So instead of moving that $100 into my short-term gains and losses, the IRS says that the holding period of the new position must include the old position. So in other words, line number 2, I actually held it within the same day. I bought it November 19th, I sold it November 19th. However, you notice in TradeLog the report has adjusted the date acquired to now include the holding period. So now the date acquired shows that this has been held for over a year. Now the IRS doesn't give rules on how to adjust dates in reporting. So in TradeLog, what we do is if a position goes from being short-term to long-term, we adjust the date acquired. So as you see what I circled, the date acquired was actually November 19th, but we've adjusted it for the adjusted holding period. So it now shows as September 26th. There's several different methods that can be used for adjusting holding period. Ultimately, the only thing the IRS says is that the holding period is included. So if it should be long-term, it needs to be reported as long-term. If it's short-term, it's reported as short-term. That's the most important thing at the end of the day. How it's reported with dates and holding period can really be different based on whatever you're using or looking at for a report. Your 1099-B, for example, most 1099-Bs, the brokers go ahead and adjust the date acquired, but there's some brokers that use different methods as well. But the key is you can't take a long-term loss and move that over to inflate your short-term losses using the wash sale rule. Someone must have tried that tactic years ago, and they made sure and cover that in the rules. So another thing, and we've talked about this earlier a little bit, but let's take a moment to talk about IRA wash sales, because this is one that surprises a lot of people, but is part of the IRS rules. So when you have a trade in a non-taxable IRA account, that can trigger a wash sale. Here's how this works. The loss occurs in your taxable account. So if you have a loss in a taxable account, and then within the wash sale window, within 30 days before or after, you acquire a replacement position, replacement shares or contract in your IRA, this can trigger a IRA wash sale, which is a special wash sale situation. It's special for this reason. The loss is permanently disallowed in the taxable account. You'll notice that in the last paragraph of the excerpt we have here from publication 550, it says except in number 4 above. So the adjustment of the new stock or securities doesn't happen if the new position is in your IRA account. So in other words, your loss that occurred in your taxable account is permanently disallowed. You're not allowed to ever take it. Even when you sell the security you purchased in your IRA, there's no adjustment. So that loss is gone. So this is why IRA wash sales can be really painful, because it can cause you to permanently disallow losses from your taxable account and never recoup them. So this is an area that you want to give attention. Now, some will say, well, the IRS doesn't know about my IRA trades. Those don't get reported, and that's true. But in recent years, there's been a lot more enforcement that we've seen from the IRS. And so if your tax return was pulled for review or audit, you can be sure that you're probably going to be asked, do you have an IRA? Did you account for IRA wash sales? And that could be part of the audit. So the IRS regulations require you to account for any IRA wash sales that occur and to report those in your taxable reporting. So with that being said, want to put up a slide here before we go into our next, or I'm going to put up a quick poll, I should say, before we go to our next slide. Give me a minute to look at some of the questions that we've had coming in. Just find out from some of the active traders we have with us today, which of these situations apply to you. You can select more than one. If you trade stocks and options, you trade in multiple accounts, trade in IRAs, or if none of these apply. We're curious to get a feel for the active traders that are with us today. Okay, some good examples that are coming in. Some of the questions that we have, we hope to answer as we go through some more in our presentation. Appreciate some of the comments we have as well. Okay, good questions. All right, so I think we've gotten everyone to respond to our little poll today, so I'm going to close that and share that what we're looking at. So it looks like 10% of those who are with us today do not have any of these situations. So you don't trade stocks and options, don't trade multiple accounts, trade in IRA accounts. Kind of what I expected to see on the numbers. This is typical. Most active traders are involved both with stocks and options. A lot of you have multiple accounts or you trade in an IRA. That's something that's becoming more popular as well. So when we look at this breakdown, we look at these results, that's really important when we look at the next aspect of the wash sale rule, which is reporting wash sales. And I know some of you had some questions when you registered, so I'm going to hopefully answer some of those in our next slide here when we talk about reporting wash sales. I know at least one person had asked the question, because sometimes people hear that you only have to do like a lump sum at the end of the year for any wash sale that occurred for a trade. But the IRS requires filling out Form 8949. You report every wash sale on Form 8949 if you're required to report that. So every wash sale adjustment needs to be entered. There's a W that's entered in column F of the current form, and then you put a positive number in column G, and this is all tallied up. So the instructions of Form 8949 kind of detail that. So you are required to make all of these wash sale adjustments throughout the year. Now, one of the big things to keep in mind is that the broker 1099B does not account for all wash sale situations. We touched on that a little bit earlier. Brokers are only required to report wash sales on identical CUSIP trades and within the same account. Even if you have multiple accounts with the same broker, they don't have to adjust wash sales across accounts because that can become very difficult. And of course, if you have accounts with different brokers, that can be impossible. So that's why the IRS, when they were writing the 1099 regulations, said, well, brokers only need to provide limited wash sales, because the 1099B is really a tool for the IRS to use for enforcement. They want to see if you don't report any wash sales, well, and your broker does report wash sales, that's going to raise an immediate red flag. But the reality is, and you'll notice this in the top excerpt we have from publication 550, the IRS says you cannot deduct a loss from a wash sale even if it is not reported on Form 1099B. We did a blog article earlier this summer about this rule, and it's one of our most popular blog articles, most read articles we've ever had. What this one sentence is saying is that you as a taxpayer are responsible for identifying and reporting all of these additional wash sales. For example, we talked about wash sales between stocks and options. That's something that you have to account for and report in your tax reporting. The broker's not required to report that. If you have wash sales across accounts, you have to make those additional adjustments and report them. If you have an IRA that you're trading the same securities in, you're responsible for adjusting those wash sales as well. So when it comes to reporting wash sales, there is a lot of detail that's involved, and the responsibility ultimately is on you as a taxpayer. So for active traders, Most of you, as we saw in our quick poll we just did, have situations that require you to make these additional wash sales, and so that is something that is involved in the whole wash sale rule and reporting it. Now, at this point in time, some of you, especially if the topic of wash sales is kind of new to you, you might be feeling a little overwhelmed, and you might even be freaking out a little bit. Well, it's time for a little reality check. One of the questions that I often hear guys ask is, how can I avoid wash sales? What do I need to do to avoid wash sales? Well, there's two answers to that. Number one, never have a loss. Now, that would be wishful trading, right? To never have a loss. But if you don't have losses, you don't have wash sales. So that would be a way to avoid all wash sales. The other thing is you can elect Section 475, which is trader status and mark-to-market accounting. If you've elected Section 475, you get to treat your gains and losses from your trading as ordinary instead of capital gains and losses, and so that's going to exempt you from the wash sale rule. And that is a good strategy for a lot of active traders, but you have to qualify, and only qualified traders can make that election, and it has its own tax consequences as well. So I know several very active traders who have not elected Section 475 because they sat down with a professional advisor, a CPA, and they evaluated and they said, no, it's better not to. So the reality is, for most active traders and investors, wash sales are inevitable. You're going to have those wash sale adjustments throughout the year. And as you see from kind of my little stop sign here, don't worry too much about wash sales. I've seen guys who worry excessively over trying to avoid every single wash sale, but that could distract you from what's most important, and that is being a profitable trader. Because again, if you have profitable trades, then you're going to capture some of those losses. You're not going to have more wash sales. So remember why you're trading, which is to make money, and make that the most important thing. Don't get overly consumed about wash sales. With that being said, though, it is important that you understand wash sales when they have negative effects and manage those effects. So there are situations where wash sales can really hurt, and you need to be concerned and know how to manage those situations. So let's look at these situations. Let me see just one second here. Yeah, let's look at these situations. Managing wash sales. So here's some situations every active trader should monitor carefully. First of all, we mentioned IRA wash sales. Typically, the advice is to avoid IRA wash sales because they permanently disallow losses. I have yet to have someone show me a benefit that comes from an IRA wash sale, because those are almost always harmful. They're permanently disallowing losses. So that's a situation. If you are trading in your IRA account, it's important to understand, and there's some strategies that you can use to help you manage those wash sales or avoid those wash sales. The second point here is losses deferred to the next tax year. That can have negative consequences. What we mean there is when it gets to the end of the tax year, these wash sale adjustments that have accumulated sometimes can have large accumulations and can potentially defer more losses than you actually had. And that can put you upside down. So when it's tax time and you're completing your tax reporting, you may find out that you actually owe taxes for capital gains, but in reality you lost money. That might be what happens from a large deferral of losses at the end of the year. So for this reason, we encourage active traders to really focus on wash sales in December and January. In December, you want to look at positions that are held open that could potentially defer losses to the next tax year. So those need to be watched. And you also, in January, need to control any wash sales that could potentially cause a deferral from the previous tax year. So December and January is always the most important times to be aware of wash sales and what is going on. Now, as I mentioned at the outset, we've kicked off an educational series over the next 2 months, and so we're going to be having a lot more because we can't talk today. We've only got about 15 minutes left in our presentation today, and there's not enough time to talk about strategies in December and January, but we do have upcoming webinars focusing on these particular areas: IRA wash sales, December positions, and January wash sales, and how you can monitor those situations and manage them. Because here's a question, I won't put this up as a poll, but just something to ask yourself real quick: are all wash sales bad? Well, not necessarily. There's actually some situations where wash sales can be good. It can be beneficial to defer some of those losses to the next year. So you don't have to focus so much on trying to close out every position, capture every loss. The important thing is understanding how wash sales are affecting you and then managing those situations. So in a moment, when we get to the end of our presentation here, I'm going to show you some of the upcoming sessions we have, webinars, that focus on these three particular areas and how you can better monitor and manage your wash sales in those situations. It's also important for active traders to see the value of having tax software that's designed for active traders. These provide tools for you. TradeLog software is designed for active traders and the IRS wash sale rule. So TradeLog's goal is to generate IRS-ready reporting based on taxpayer rules. We don't generate reports for brokers. We're focused on providing taxpayer reporting and making all of these required wash sale adjustments across accounts, IRA adjustments, between stocks and options. But also TradeLog provides reporting to help you manage your wash sales. And so in the webinars that we have coming up in the next couple months, we're going to be looking at how to use TradeLog reports to actually understand how wash sales are affecting you and to be able to make decisions based on those reports, whether you need to close positions, whether you need to open positions, or not even worry at all about your wash sales. So we'll be looking at that more in our upcoming webinars. Something to keep in mind: a lot of popular tax software programs that are made for the average American do nothing more than import 1099-B data from your broker. So keep in mind, if you have situations where your 1099 does not adjust or account for all wash sales, then simply importing the 1099 isn't going to provide you accurate tax reporting. These programs are made for the guy who's maybe doing a couple trades in a year, not for active traders. And so that's the difference between software programs like TradeLog and some of the popular tax software programs made for the everyday person. So let's talk about a couple of key takeaways. Maybe if you're jotting down some notes, these are 4 key takeaways from what we've discussed today. Number 1, we talked about the IRS wash sale rule, some of the different aspects. We could really delve into some of those aspects more. Some of your questions might give us an opportunity here at the end to talk about a few things a little bit more. But the key is to know that there's more involved in the wash sale rule than what is just reported on the 1099-B. There's aspects that involve stocks and options, multiple accounts, IRA accounts. These types of wash sales affect you as an active trader. You need to understand those so that you can make sure and account for them. Again, we talked about point number 2, focus on profitable trading, not trying to avoid every wash sale, because most wash sales are inevitable. They're going to happen if you're actively trading the same security. But make your number 1 priority on being a profitable trader. And then you're going to minimize those wash sales, and you're going to not waste your time trying to focus too much on the wash sales. Point number 3, learn to manage wash sales when they matter most. As I mentioned, IRA wash sales and wash sales in December and January are the ones that typically have the most effect on active traders, negative effect. So in our upcoming webinars and blog articles, we're going to be focusing on those 3 areas, how to manage those wash sales if they're going to hurt you. Some of them may not, and if they're not going to hurt you, then you don't have to worry about it, but the key is understanding it. And number 4 is to use tools like TradeLog that are designed to handle the wash sale rule for active traders. And that's something that is important for active traders, to not wait until April when you're doing your taxes to see how wash sales affect you, but to have tools to understand wash sales and look at the effects before the tax year is over, when you still have an opportunity to do something about it. So some resources available for traders. We have our website, TradeLogSoftware.com. You can check out our resources section. Here we have our guide to wash sales. We also have more webinars. In fact, I'm going to switch over right now and just show you a few of the things on our website. So if you go to the resources and go to IRS wash sale rule, you can either do it through the menu, or you can click on the resources and go to our definitive guide for IRS wash sale rule. And here we have a pretty lengthy guide where we've talked about the IRS wash sale rule. We break down and explain some of these things that we talked about here in our webinar today, as well as some other things. For example, I've mentioned a couple times the chart of wash sale triggers. So here's a chart that you can refer to that talks about different scenarios and what would trigger a wash sale if within 30 days you do such and such. So this is a great resource to refer to and answer many of the questions that you guys have had today. Also, under support, we have webinars, and here you can see our upcoming webinar events that we have. We have today's event, and then coming up December 2nd, we have Watching Wash Sales in December. Then on December 18th, we have a webinar about IRA wash sales. December 30th, how to avoid harmful January wash sales. So if you haven't yet signed up for those, we encourage you to sign up for those, and we'll be sending out some reminders as we get closer, because these are going to really go in depth on these three areas: December wash sales, IRA wash sales, and January wash sales. And we're going to talk about how to use TradeLog in these situations. So many of you are TradeLog users. We're going to help you understand some of the reports that TradeLog generates a little bit better in these sessions. Of course, too, under our support section, if you are a TradeLog user, you can submit support requests to us, or for any of you, if you have questions that we don't answer today, you can contact us through our website. And in the features section, you can learn more about TradeLog software and the features that it has that are designed for active traders. So a lot of resources on our website that we encourage you to check out. And I'm going to leave this slide up here so that you can write that down if you want to write down our web address if you don't have that, and check out some of those resources. So that's pretty much the meat of our presentation today. And again, we're glad so many of you could join us today. If you have to take off, I'm going to stick around now and answer a few questions while we have a few minutes left in our presentation, and try to answer some of these questions that you have. Okay, so Steve had a question about a C corporation entity. Are the wash sales the same? Essentially, the wash sale rule is the same when it comes to your individual tax return as well as corporate tax returns or an entity tax return. Of course, the difference may be, though the biggest difference is if you have elected Section 475 mark to market, and a lot of guys that are using entities have made that election. So if you make the Section 475 election, then you are exempt from the wash sale rules, and that can be very beneficial. Now, there are some specific rules when it comes to entities reporting taxes when it comes to Form 8949. In the last couple of years, the IRS has eased up a little bit so that you don't have to provide as much of the details when you actually submit your tax return. So there's a little bit difference when it comes to reporting, but you still have to have those details available. So that's a big catch-all when it comes to your 8949 reporting. So we discuss a little more about reporting and the differences with entities on our website, as well in our guide to wash sales, as well as our guide to Schedule D Form 8949. So those might be some resources if you have more questions, or you can contact us about if you're filing with an entity or something, and we can try to, if we can't answer your question, we can point you to someone who can answer your question. Okay, let me look here at some of our next questions. One of the questions that came up as well is about Section 1256 contracts, or like with futures. If you're trading futures or some other options, for example ETF options, many of them classify for the same tax treatment as futures, which we call Section 1256. Well, Section 1256 contracts are exempt from wash sale rules as well. So that's another advantage if you are trading 1256 contracts. Now, those are automatically treated with mark-to-market accounting in each tax year. There's no election made for that. But 1256 contracts are exempt from wash sale requirements. Okay, looking at a few of the other questions. Some of the questions that we have, I think my assistant Melina is helping answer some, and some of them we may have to answer offline more directly because there's a lot of specific details that we'd have to kind of get into. Frederick asked a great question about closing out positions at the end of November and not trading them. And again, this is where we talk about understanding and managing wash sales. Our webinar on December 2nd is really going to help out with that question because we're going to show you how to use TradeLog to see what positions you may or may not want to close out before the end of the tax year. You don't necessarily have to close the positions out by the end of November. It depends. If you close it out by the end of November, then you can start trading it right away in January. But the biggest thing is to make sure if you have a position that has a lot of losses attached to it, you may want to close it before the end of the tax year so that you can capture the losses. But again, I stress the word may because I've seen some tax advisors who tell you to close out all of your positions by the end of November and not trade to the month of December at all. And, you know, that's okay if that's what you want to do. But sometimes this might have been a bad year and you have plenty of losses and it doesn't hurt to defer some of those to next year. At the same time, there might be some great opportunities to make some profitable trades in the month of December. So don't let the wash sale rule prevent you from making money or from being successful. Understand what's going on and then make those decisions on which trades you need to close out. But Frederick's question brings up a good point. If you close out a position because you need to capture that loss, you can't open another position for 31 days because if you open another position that's qualified, it's going to trigger a wash sale and you're going to go back in the same scenario. So our December 2nd webinar, we're going to focus on that a little bit more, and I think that'll answer those questions and really help you out. Rolando asked a question about if you're married, if your spouse, you're filing a joint tax return, then definitely if you're filing a joint tax return, you need to adjust wash sales across those accounts. So if your spouse has an account, a brokerage account, and you have a separate brokerage account, you need to adjust wash sales across accounts. And TradeLog allows you to do that. You're able to manage multiple accounts in the software, and whether they be IRA accounts, whether they be cash basis accounting, or if you also are doing mark-to-market, you can have accounts in all three different methods in TradeLog, and you can have that for your spouse as well and adjust wash sales. Okay, and Lewis asked a question about IRA wash sales, the permanently disallowed loss. That's basically, I think you answered your own question from what I'm seeing. But again, if you have a loss that occurs in a taxable account and you make a trade in an IRA account, maybe you buy the same shares that you sold, you buy them in your IRA account within that 30-day window, then that can be a wash sale. It's an IRA wash sale. So what happens is the loss in the taxable account, you cannot take it. It's disallowed. It's just basically wiped out. And there's no adjustment made to the IRA. It's not absorbed into the IRA or anything. It's simply gone. So that can really hurt. And that's why, again, our webinar coming up later in December, we're going to talk about IRA wash sales. And I'm going to give some more examples because it can sometimes be a little hard to understand that until you look at some actual examples and see what we're talking about with the adjustment that's made and how the loss is disallowed. But we're also going to talk about strategies because there's a couple of strategies that you could use if you are trading the same security in your IRA and your taxable account. You may be able to avoid wash sales, or there's even some potential strategies to offset those within, you have a short period of time, but there's some strategies you may be able to use. Okay, working through some of our questions here. Great questions. Again, thank you all for your patience and for joining us today. Let's see. Okay. I think we answered some of these questions about David asked about wash sales carried forward from 2013. And see, this is where, again, understanding wash sales and using, for example, like the wash sale reporting in TradeLog, it is possible to actually close out positions and be able to capture some of those losses from 2013 and use them in 2014. And that's where it can be advantageous when it comes to wash sales, because maybe 2013 was really bad and you lost a lot of money. And so if you deferred some of those losses in wash sales, then that can allow you to maybe take some of those losses in 2014 and offset some of the gains that you may have. Hopefully you're profitable in 2014. So you can create situations, then you can actually go ahead and close out positions and then be able to claim those losses that were carried over from 2013. But keep in mind, if you have a loss now in 2014, say you close a position today in order to use that loss, to capture that loss, if you buy the position or a substantially identical position within the next 30 days, then that may be another wash sale. So you just continue the cycle over and over. Okay, another question about IRA wash sales. Let's see. I just had it and I just lost it here. Herb asked this question, and thank you for asking this, Herb, because I meant to mention this. When it comes to IRA wash sales, it's only if the loss occurs in a taxable account and you purchase a substantially identical security or contract in your IRA. So if you have a loss in your IRA, the IRS doesn't care. So you can buy and sell in your IRA, and there's no wash sales made within the IRA. It's only if the loss occurs in your taxable account and you purchase substantially identical shares or contracts in your IRA. Then it can trigger kind of what we would call a one-way wash sale. So that's the way that works. Great question. Let's see. Cheryl asked a good question. This kind of gets into a little bit of technical support with TradeLog, but I will mention this. In TradeLog, we actually, as I mentioned earlier, allow you to manage multiple accounts in the program. And so if you have multiple brokerage accounts, the way TradeLog works now is you basically create separate brokerage account tabs. And let me look real quick. I might even have an example I can pull up. Let's see if I have one. So if you have an account and it has multiple, or you have a TradeLog data file and you have multiple accounts, here's just a quick example. I'll pull over to my screen. You should be able to see it. You have multiple account tabs. So your final tax reporting is always run from the All Accounts tab. So as long as you're on the All Accounts tab, it's going to adjust wash sales across any accounts that need to be adjusted. If it's an IRA, it's going to apply the IRA rules. If it's a cash basis account, it applies the regular wash sale rules. So just make sure that you're using a multi-account data file. If you do have your TradeLog accounts in separate data files, then you need to combine them and you'll get the same result. You'll have multiple tabs. But then once you combine them, you can run your wash sale reporting across all accounts. And while we're talking about TradeLog, Charles asked a good question about TradeLog's reporting. What TradeLog produces is Form 8949, which is used with the Schedule D. We don't actually produce the Schedule D because you may have other things to report on your Schedule D. For example, you might have real estate transactions, you might have some sort of other investments, but we generate a Form 8949 with all of your trading gains and losses on it, and then you can simply use the totals to enter into your Schedule D. So you can print out the 8949 and you can send it with your tax return. If you're e-filing, there's several methods of using the TradeLog 8949 to e-file with popular tax programs that are out there for e-filing, or if you're using a CPA, you can send a PDF or a printed copy to them. Several different options. You can check that out on our website, TradeLogSoftware.com. Look under the Features tab, and we talk more about the reporting that we generate. Okay, so I think we're at the end of the time, and I'm getting the signal here to wrap it up. We still have some questions that some of you have asked. If we haven't answered your question, we have your email address. We're going to try to email some of you and let you know what we can, if we can answer your questions, or if we have any more details or a link that we can maybe point you to. So again, we thank everyone for joining us today. We have recorded the session, so you'll get an email sometime within the next 24 hours as soon as the recording is available online, and you'll be able to rewatch this if you have any other questions or if you missed any parts. So thank you again for joining us. We hope all of you sign up for our future events coming up in the next few weeks, talking about wash sales in those 3 situations we want to manage: December wash sales, IRA wash sales, and January wash sales. So look forward to seeing you again then. Thanks again, and have a great evening.